Whether you're investing or trading in crypto, one thing that you're very likely to come across are cryptocurrency charts. Now, charts in general, whether we're talking about crypto, stocks, or anything, are often presented in the form of candlestick charts. So the way they look is that you see individual bars which resemble candlesticks somewhat. Each specific bar represents a single time frame. So, for example, if we are looking at a daily chart, then each bar will be 1 day of trading activity. The candlestick is composed of a body and also the lower and the upper wick. Now, if the candlestick is green, then that means the close, so the end of the trading day, was higher than the open, whereas if it is red, then it means that the close was lower than the open. The body represents the open and the close. So if we're talking about a green candlestick, then of course the lower part of the body is the open and the upper limit of the body is the close, whereas the wicks represent the low and the high. The lower wick, of course, represents the low, the lowest point to which the price came during a specific time frame, whereas the upper wick represents the highest point that the price touched. Now, traditional markets have opening hours. So let's say a specific stock exchange opens at 9 in the morning and then closes at 3 in the afternoon or whatever. And in that case, if you look at a daily candlestick chart, the open will be the open of the trading day, whereas the close will be the time at which the market closed. And there will also be no bars for weekends, holidays, and days when the market isn't open. With crypto, however, things are a bit different, since crypto trades 24/7, which means that the markets are always open and there are no weekends or other days when the markets would be closed and there would be no trading activity. This means that the open and close are taken to be at midnight. So the close of one day is simultaneously the open of the next day. And on most charts, unless otherwise specified, the time zone, which is taken here, because then, of course, the question of which time zone to use becomes relevant, because if you use a different time zone, the chart will look different. But mostly, unless otherwise specified, the time zone that is used is UTC. Now, when you've got these basics down on what a candlestick looks like, then that's where the world of technical analysis opens up for you. There are countless strategies and ways to predict, or rather, not really predict, but to analyze what is likely to happen after a specific event, and we cover many of these in depth in the chart section and also throughout the News Crypto Academy. In any case, one important thing to keep in mind if trading is what you want to do is your risk management. Especially if you're starting out, make sure to never risk more than you can afford to lose. And a good way to start out and get the hang of trading before putting actual important sums on the line is to use something that's called paper trading or demo trading. This refers to trading with simulated virtual money, so not actual crypto, but just a simulation that allows you to see how a specific trading strategy would play out. After that, you can maybe try using very small sums of money, so something that you wouldn't really even notice if you lost it, and try out different strategies. Make sure that you can be consistent and rational, and only then move on to larger sums of money.